With its first mover advantages, Tesla, the driving force behind the electric vehicle revolution, has swept the automobile industry off its feet. Although it made money for 3 years running, there could be a storm approaching. We'll examine the crucial topic in this video. Will Tesla continue to lead in electric vehicles, even while its operating margin experiences volatility? We'll look at the effects of Tesla's aggressive pricing approach and the larger issues that the business and its investors are facing. Come along on this adventure with us as we analyze the prospects and difficulties facing Tesla, the leader of the electric future. Please remember to hit the like and subscribe buttons before we move on. Let's get this video started, and welcome to Tesla Stock News. Imagine being at a party where everyone is chattering about the newest and greatest devices and fashions. The buzz surrounding electric vehicles, EVs, is at the center of it all. Tesla is the one setting the example on the dance floor with what seems to be the hottest dance technique that everyone wants to learn. Let's speak about numbers now. As per a new analysis by Fortune Business Insights, the electric vehicle (EV) industry is expected to reach a staggering annual valuation of $1.58 trillion by 2030. That would be equivalent to having an endless supply of cash expanding at a rapid pace of over 18% annually starting in 2022. Envision receiving an 18% weekly increase in your allowance. It's astounding. However, what makes Tesla such a significant deal? Let's say that there is a race going on at this gathering, and Tesla was the first to show up. Before anyone else had even put on their dancing shoes, they had already put up the decorations, turned on the music, and begun to dance. Their first mover advantage is that it's comparable to showing up to a pizza party first thing on a Friday night. People take note of you and keep you in mind for it. Let's now discuss Tesla's spectacular debut, which included a market valuation of an astounding $778 billion. They resemble the EV dance party's kingpin, to put it plainly. More money is invested in them than in all those established automakers put together. It's similar to being the one on the dance floor with the best movements while everyone else is still figuring out the beat. The really shocking thing is that the EV movement isn't a passing fad. It's more akin to an endless remix that will play for many years. For this reason, investors are supporting Tesla wholeheartedly. Similar to fortifying a dance floor to keep people out, they think that Tesla's early actions in the EV space will enable them to erect a large wall of defense in the automotive industry. Tesla has made some quite significant profits by utilizing its early bird advantages. Undoubtedly, one of Tesla's greatest advantages is that it is the only automaker that focuses only on electric cars while maintaining a profit margin. Yes, you heard correctly. Others may occasionally turn a profit, but their EV segments are more akin to monstrous businesses that devour money. By 2023, however, Tesla is expected to turn a profit for the fourth consecutive year. That is, if all those fancy accounting regulations are followed. And when it comes to money, Tesla has a plenty of it. They had an incredible $23.08 billion laying about at the end of June. While the majority of other automakers may have some cash on hand, they are also deeply in debt. Not Tesla, though. Their normal car-making operations are bringing them a substantial amount of money. Folks, that's not all. With its production capacity, Tesla can outpace its competitors. Equipped with cutting-edge facilities in Texas and Germany, Tesla is preparing for a significant change in the automobile industry. By 2024, the business hopes to have produced over 2 million electric vehicles yearly. This is an incredible aim. The next phase of Tesla's ambitious journey begins with these state-of-the-art gigafactories. The Berlin Gigafactory is a representation of efficiency and innovation in Germany. It has the potential to develop into Europe's center for excellence in electric vehicle manufacturing. Concurrently, the Texas-based Austin Gigafactory is poised to revolutionize the domestic electric vehicle manufacturing industry. These establishments are the engine of a sustainable automotive revolution. They are more than just manufacturers. With the combined strength of these two enormous production facilities, Tesla hopes to disrupt the market and establish new standards for the manufacture of electric vehicles. This bold initiative demonstrates Tesla's steadfast dedication to increasing production and lowering the cost of electric vehicles for consumers all over the world. Tesla's objective of producing over 2 million electric vehicles annually by 2024 is not simply a tall goal, but a bold declaration of purpose as the automotive environment continues to change. It demonstrates Tesla's resolve to drive the shift in transportation from fossil fuels to sustainable modes of transportation, one electrifying car at a time. That would be similar to breaking the speed limit in the race to build cars. When it comes to manufacturing this many battery-powered vehicles, no one else even comes close. Not to mention Elon Musk, the covert weapon. He resembles the automotive industry's Superman. Under his direction, Tesla grew from a small startup to an enormous automobile manufacturing facility. And the price of the stock, since they went public in 2010, it has increased by an astounding 15,000%. That's a big zero count. Thus, Tesla isn't simply riding the electric wave, thanks to Elon Musk's magic touch, their financial resources, and their production prowess. They're making it appear simple. However, things are not going as planned. Regarding its operational margin, Tesla is experiencing some ups and downs. The company's operational margin is plummeting while its stock price is skyrocketing. Since September 2022, things have been a little rough. Up to June 30th, 2023, Tesla's operating margin was soaring at 17.2%, but in the last 3 quarters it had dropped to a very unstable 9.6%. That's a significant decline, and it has some people questioning if Tesla's operating margin could ever reach 0%. Although it's not a given that Tesla will reach zero, it's still a possibility. On the horizon, a large group of storm clouds is building. First off, all of Tesla's models, from the Model 3 to the Model X, have seen price reductions of all kinds. Elon Musk explained that the reason they're lowering costs is because they think demand may be slowing down. It's like a clearance sale before a major storm. A decrease in price typically indicates an attempt to clear excess inventory. The costly Model X and Model S have recently seen a significant price reduction, going from extremely expensive to merely fairly expensive. The worst part is that those two models account for a mere 4% of their total sales. Though not as severely, the Model 3 and Model Y also received some cuts at this time. Nevertheless, it's enough to make you wonder if they're attempting to get rid of inventory in case demand declines. To add to the confusion, Tesla also reduced the cost of their sophisticated self-driving technology. That would be similar to lowering the cost of a burger's special sauce. Although it could taste excellent, the profit margins will suffer. Currently, we won't find out until Tesla releases the information in early 2024 how all these price reductions will impact their bottom line. One thing is certain, though, with these drastic price reductions, it appears like Tesla's operating margin is about to take a rough tumble. Beyond just its declining operating margin, Tesla's problems present a broad range of difficulties for the industry leader in electric vehicles. Comparing Tesla to the traditional auto titans, a significant obstacle in the company's development has been its lack of brand power and heritage. The classic automaker's enduring reputations, years of iconic products, and ingrained consumer trust have all contributed to their impressive legacies. Their logos are more than just symbols. They are representations of tradition, dependability, and safety. On the other hand, Tesla continues to make its mark in the annals of automotive history even as it ushers in a new era of electric mobility. However, Tesla has made significant progress thanks to its disruptive strategy and quick invention, demonstrating that the new kid on the block can really change the automotive landscape. Tesla's environmentally conscious image helped it make waves, but the recent sharp price changes have rocked the used car market and left a trail of unhappy buyers in their wake. Building brand loyalty and trust among its current owners isn't the ideal approach to achieve this pricing roller coaster. Traditional automakers have a lot of trust. It's like the glue that holds a brand together. Tesla is encountering roadblocks in its aspirations to go beyond merely manufacturing automobiles. Despite its popularity, their supercharger network is not a high-margin source of revenue. Additionally, since the acquisition of SolarCity, solar installation has been a financial burden, and its energy-generating and storage sector reported decreased revenue in the second quarter. Therefore, those declining margins aren't being significantly helped by the company's supplementary operations. And there is the Elon Musk component. The mysterious CEO of the corporation, Elon Musk, is known for juggling a number of side projects, including X, the rebranded social media site, and other endeavors. This divided focus may prove to be problematic, particularly if it leads to encounters with securities regulators. Customers and investors are also perplexed by Musk's tendency to overpromise and underdeliver on advancements. To make matters worse, economic indicators are raising red flags over the possibility of a U.S. recession in the near future. A recession could be problematic for sales of new cars, especially electric vehicles, EVs, as the auto sector is strongly correlated with economic cycles. When you combine all of these negative factors, you have a business that is trading at an extremely high price to earnings ratio minus 71 times Wall Street's projected 2023 earnings for its industry. Compared to auto stocks, which typically have high single-digit ratios, this is a far cry. Thus, even though Tesla's profit margin would not go to 0%, it appears more likely that there will be a sizable decline that puts it in the low single digits. All in all, Tesla faces a difficult road ahead due to price volatility, brand building, diversification bumps, leadership detours, and unpredictability in the economy. An exciting new chapter in the company's tale will be written on how it overcomes these challenges. There are a lot of exciting events on the horizon as we begin this fascinating investigation of Tesla's victories and setbacks. The leader in electric car technology, Tesla, is positioned at the nexus of innovation and obstacles. The fact that Tesla is still relatively new to the automotive industry is one of its major challenges. Tesla lacks the credibility that comes with a lengthy history, in contrast to established auto manufacturers. Although it has supported the green movement, the used automobile industry and some customers are in a state of flux as a result of recent drastic price revisions. It's not the best approach to foster brand loyalty or trust among its current owners to implement this price roller coaster. A brand's foundation is trust, which is something the historic automakers have built over many years. There have been several obstacles on Tesla's path to being more than just an automaker. Despite its popularity, the company's supercharger network is not a high-margin offering. Its revenue from energy generation and storage also decreased in the second quarter, and since Tesla bought SolarCity, the solar installation business has continued to be a loss-making venture. Therefore, the company's supplementary activities don't significantly support its margins. One question remains as we navigate this fascinating Tesla landscape. How can the company overcome these obstacles and carry on with its exciting journey? Please feel free to discuss Tesla's price policies, Elon Musk's involvement, and the company's ability to weather economic turbulence. Please share your thoughts and solutions in the comments area. Please remember to hit the like button and subscribe to Tesla Stock News if you thought this analysis to be informative and would like to be up to date on everything Tesla. We appreciate your time and we'll see you in our upcoming films.